Hey everybody, welcome to the channel. This is Sohail and today I want to teach you how you can trade on Binance Futures trading platform. This is a complete beginner's guide to Binance Futures and we're going to talk about every detail. So if you're interested to know about any specific part, please check the description of this video. I place timestamps and you can directly go to the parts you want to know about simply by clicking on them. Without wasting any more time, let's get started. When you log into your account here in the menu bar at the top of the page, you see that we have derivatives. If you don't know what derivative is, derivatives are financial assets that their value is derived from another asset or group of assets maybe. So we have an underlying asset, in this case, which is Bitcoin or other coins. And for example, based on the Bitcoin, we can have some kinds of contracts between buyers and sellers that the value of these contracts are derived from the Bitcoin price. One of these contracts that is the subject of this video and we want to talk about it is future contracts. First, let me explain very shortly what future market is because it's necessary to understand the concept of contracts. In previous episode, you learned how to trade on spot market of Binance and you understood what is meaning of spot trading. In spot trading, you trade for immediate delivery. When you are buying Bitcoin and on the other hand, someone is selling Bitcoin, the exchange between you and the seller is done instantly and you'll have your Bitcoin and the seller will have Tether, for example, immediately when the transaction is done and the coins themselves are exchanged between you. But in futures market, you buy or sell a future contract, a contract between buyer and seller for delivery of the coins in a future date. So they have expiry date. Besides these traditional form of future contracts, we have also perpetual futures contracts that don't have expiry date and you can stay in your position as long as you want. Perpetual future contracts are the more common one in cryptocurrency market. Now you may ask, what's the point of trading in futures market while you can trade in spot market? In spot market, you can make profit in one way, and that is, for example, you buy Bitcoin, the Bitcoin price increases and you sell your Bitcoin at higher price for profit. But in futures market, you can make profit in both ways, whether the Bitcoin prices rise or fall. So when you expect that the Bitcoin price is going to rise, you go long. In other words, you buy a future contract. And when you expect that the Bitcoin price is going to fall, you go short, or in other words, you sell a future contract. So even if you don't have any Bitcoin, you can sell it and buy it back in lower prices. You can't do this in spot market. And we can also use future contracts for hedging and risk management. And also on Binance, we can leverage our positions up to 125 times larger than our account balance, which I'll explain all of these later in this video. Now, getting back to the menu bar derivatives, here we have two kinds of contracts to select. USD-M futures, which are actually USDT margin futures, and we have leverage up to 125 for them. In these kinds of futures, stable coins like USDT are used as collateral, so you must have stable coins available for trading and your profit and loss is based on stable coin. And coin M futures that are actually coin margin futures. They can be with or without expiry date. And here also we have leverage up to 125. Pay attention that here the base asset, the coin, is used as collateral and you must have, for example, Bitcoin available to trade and your profit and loss is in terms of the Bitcoin. We can also change between these two inside the trading platform. Let's select USD-M futures and there in the trading platform, I'll fully explain the difference between these kinds of futures. Here we go, we are on Binance Futures trading platform now. Before I start explaining the contracts and how to place buy or sell orders, let's take a look at the environment of the trading platform and see what we have. The general structure of future trading platform is similar to spot trading platform, and if you watched my previous video or you're already familiar with trading on Binance spot market, you can clearly see that they are very similar. Let's explore different parts of the platform very quickly and then start with the actual trading stuff. If you watched my previous episode, you can skip this part. Here's the price chart. This is a candlestick chart and you can switch between different time frames here. And if you click on time, you'll have line chart. Let's get back to candlestick chart. Here, by the help of this button, you can select your favorite time frames to be shown here. By the help of this button, you can add indicators or other market information to the chart. For example, let's add volume. and here it is. And this button, if selected, your positions will be shown on the chart. Here you have different tools for trading. Here, for example, you can add different lines, as you can see. And here some tools for analyzing the chart like Fibonacci retracement. And here brush or some shapes, text, ruler, and other stuff that can be helpful for trading. This chart is from TradingView. We have also the original one, which is from Binance, but not so many tools. And the indicators are also limited, as you can see. The chart that is from TradingView is a better option. This is the order book. If you don't know what order book is, when you place an order to buy or sell, you will actually buy or sell from an order that is on the order book. And if the order doesn't exist, in other words, if no one is buying or selling at the price that you placed your order, so your order remains in this order book until someone buys or sells at your price. Actually, these are pending orders you see here in the order book section. And here, by the help of this button, you can have a larger list of only pending buying orders or pending selling orders, as you can see. And the most recent completed orders are shown here in the trades section. So here, these are the most recent trades that are successfully completed. We can also have a graphical representation of the order book here by selecting this tab. It's actually a cumulative graph. The left side shows pending buying orders and the right side shows pending selling orders. All right, let's get back to the price chart. And here, the right side of the window is where we trade and place our orders. And we manage the positions, open orders, transactions, and other stuff related to trading here in the bottom of the chart. In the top right, you can see we have a setting button. Here you can switch between light mode and dark mode. Here you can change the red and green colors into traditional or fresh. And here you can change the layout. The Pro layout is already selected and I just explained it. In Pro layout, you can customize these parts. For example, you can turn off whatever you don't need. Let's turn off order book and trades. And you can drag these windows or resize them, as you can see. And you can simply go back to the default setting by clicking on back to the default layout. We have also another layout, which is full screen. It's similar to Pro, but the only difference is that here the buy and sell are in separate sections and order book and trades here above that. And with this layout, we don't have any ability to customize the layout. We continue with Pro layout in this video. Here we have another option, which is multiple charts. And by the help of this, we can have different charts on the screen. For example, let's select 4 charts and here we go, 4 charts on the screen, and you can analyze the price chart of 4 different coins at the same time. This can be useful for trading when you need to monitor different coins. All right, let's get back to our trading platform and see what's the difference between USD-M futures and CoinM futures, how we select different contracts and how we trade them. Here in the menu bar, you can switch between USD-M futures and CoinM futures. We are in USD-M futures right now and BTC USDT perpetual contract is selected, as you can see. And it means this future contract doesn't have expiry date. As I just explained, for these kinds of futures contracts, your collateral and profit and loss is denominated in stablecoin, USDT for this case. And if you look at this part, you see that it's based on USDT and we need to transfer USDT to start trading this perpetual future contract. And if you scroll down here in the assets, you see that USDT is selected. And for USD margin futures, there are USDT and BUSD available in the assets, as you can see. Let's search BTC here, BTC. As you can see here, we have also BTC USDT quarterly March 26, which is not a perpetual contract and it has expiry date. The first 2 figures is month and the second 2 figures is the day. And if you look at here, you see that we need USDT to buy or sell this contract. For another example, let's search Ethereum, ETH. Here it is. This is ETH USDT perpetual contract. And because this is USD margin future, so everything is based on USDT. And as you can see here, we need USDT to trade this ETH USDT perpetual contract. So for USD-M futures contracts, you need stablecoin as collateral like USDT or BUSD, as I just explained in the examples. And your profit and loss is denominated in USDT or BUSD, for example. Please pay attention that when you search here, for example, BTC, the ones that are not based on stable coins like this one, which is BTC USD, these are coin margin futures that I want to explain them now to see what's the difference. Here I select Coin M futures, and here it is. Here also in coin margin futures, we can have both of contracts with or without expiry date. For example, here BTC USD quarterly March 26 is selected, which is not a perpetual contract and it has expiry date. And as I just explained, the first two figures is month and the second two figures is the day. This is coin margin future, and your collateral and profit and loss is based on the coin, which is Bitcoin in this case. And if you look at this part, you see that you need to have Bitcoin available in your wallet to start trading this contract. And if you scroll down here in the assets, you see that BTC is selected with list of some other coins as an asset for coin margin futures. Let's again search BTC here, BTC. And this is the perpetual one. And for this contract, you can see here that we need BTC to place buy or sell orders because this is a coin margin future contract. For another example in coin margin futures, let's search BNB, Binance Coin. These are quarterly, and this is the perpetual one. And as you can see here, for trading this future contract, you need to have BNB in your future wallet. And here in the assets, you can see that BNB is selected. And your profit and loss will be denominated in BNB. So I think now you understand what's the difference between USDT margin futures and coin margin futures. Let's switch to USD-M futures. And as you can see, BTC USDT perpetual contract is already selected. BTC USDT perpetual contract has the highest trading volume among any other contract traded here on Binance. Let me show you. Here by selecting USD-M, we filter the results and limit them to show only USD margin futures. And here change is selected, which is sorting of the contracts based on percentage of change in the past 24 hours. And by selecting volume, we can sort this list based on the trading volume they had in the past 24 hours. Here I select this small button to show the highest volume first. And as you can see, BTC USDT perpetual contract has trading volume of 16 billion tethers, or its equivalent $16 billion in the past 24 hours. And in the second place, ETH USDT perpetual with trading volume of something like $5 billion. So you can clearly see that the difference is huge. And if we check coin margin futures by selecting Coin M here, and selecting this small button, you can see that the highest trading volume is for BTC USD perpetual with trading volume of more than $5 billion, as you can see. So you can clearly see that BTC USDT perpetual contract has significantly highest trading volume right now. So we have higher liquidity for this contract in compared to others. We continue with BTC USDT perpetual contract in this video. Here we have some information for BTC USDT perpetual contract, and also two settings here for this contract that I'll discuss them when I started to explain the orders. This is the price, the last price this contract traded. Actually, it's from here. As I explained, this window shows the most recent successful trades. This is mark price, and it may be different with the last price. Mark price is calculated based on index price and funding rate. Mark price is designed for preventing market manipulation, and it's used for liquidation and unrealized P&L, profit and loss. Don't worry about liquidation or unrealized or realized P&L. I'll explain all of them later in this video. This is index price. In perpetual futures contracts, a contract price is based on underlying index price. The index price is calculated based on the average price of the asset according to major spot markets and also the relative trading volume. For example, for this case, average price of Bitcoin on different major spot markets, and also by considering the trading volume of the Bitcoin, the index price is calculated. And the price of this Bitcoin perpetual contract is based on the Bitcoin index price. So price of perpetual contracts are usually equal or very near to spot market prices. This is funding rate and the countdown that you see here. Let me explain what funding rate is. Traditional future contracts have expiry date, usually quarterly, like the ones I showed you. And when we get close to settlement date, the price of future contracts converges with spot price. But in perpetual contracts like this one, we don't have expiry date and you can have your position as long as you are not get liquidated. So exchanges need to be sure that the price of this perpetual contract and this index price converge regularly. They use funding rate for this purpose. The funding rate is calculated based on Binance interest rate and some average of last price and mark price. And based on this funding rate, traders pay or receive funding, which is the difference between contract price and index price multiplied by this funding rate. When the market is bullish, the funding rate is positive and long traders pay short traders. When the market is bearish, the funding rate is negative and short traders pay long traders. By doing this, the exchange can make sure that the price of perpetual contract and spot market price converges. On Binance, this happens every 8 hours, and this is the countdown you see here. Here we have the amount of change and percentage of change in the past 24 hours. Here it shows the highest price and lowest price that we've had in the past 24 hours. And here, this is the trading volume in the past 24 hours in terms of number of Bitcoins, which is something like 370,000. And here it shows trading volume in terms of Tether. It's actually dollar amount of trading volume in the past 24 hours, which is more than $16 billion, as you can see. All right, now let's see how we place buy or sell orders and what we must know about trading futures contracts. Before starting with orders, you must know some concepts related to futures trading. The first and the most important one is margin. Here in futures trading platform, your account is a margin account and you can do margin trading and you can have greater amount of capital by borrowing money from the broker. It's called leverage. You leverage your position. In Binance futures trading platform, you can leverage your position up to 125 times. You can adjust your leverage here. You can increase or decrease by the help of this plus button or minus button, or you can use this slider to adjust your leverage. The greater the amount of leverage, the lower the maximum position size. For example, you can see that for leverage 25, the maximum position size is 1 million USDT, but for leverage 100, for example, it's 250,000 USDT. So the greater the amount of the leverage, the lower the maximum position size. And setting to 1 means you will not leverage your positions and you will actually trade with your available money, not borrowed money. Let's set it, for example, on 10. What does this mean? This means, for example, consider Bitcoin price is 40,000 and you have 10,000 USDT in your account. Because you chose leverage ratio of 10, with all your available money, you can buy 2.5 Bitcoins. And if you want to buy 1 Bitcoin, Binance will take 4,000, and with leverage ratio of 10, you can buy 1 Bitcoin. This 4,000 to buy 1 Bitcoin or 10,000 in the first example to buy 2.5 Bitcoins are called margin, and it's called you're buying on margin. which means you borrowed money to buy this much of Bitcoin, and the Bitcoin in your account acts as collateral. By doing this, you will have larger profits on successful trades, but you must pay attention that if the trade is not successful, your loss also will be large, same as your expected profit. Margin trading is like a double sword, and you must be very careful with that, especially in cryptocurrency market that is very volatile. All right, let's confirm this. So we chose leverage ratio of 10, as you can see here. One important thing that you must completely understand when it comes to margin trading is liquidation. Getting back to previous example, with your $10,000 and leverage of 10, you bought 2.5 Bitcoin at the price 40,000. If the Bitcoin price falls 10%, your loss would be 10% multiplied by 10, which is equal 100%, and you will lose your 10,000, your entire account, and you become liquidated. Even if shortly after that the price advances, you will not benefit from the rise because you were liquidated. You are out of the game. Or in the second example, with your $10,000 account and leverage of 10, you bought 1 Bitcoin at 40,000. The margin is 4,000, and with leverage of 10, you bought 1 Bitcoin. If the price drops 10%, your entire margin, the 4,000, is wiped out, and your position will be liquidated if the price goes lower and wipes out the rest of your account, or even it can cause your other positions get liquidated. Because as I said, when you are margin trading, besides the account, your possession of coins also act as collateral. We have a setting to prevent this, which I'll explain later. So you must pay attention to two important metrics here. Let me unselect this: margin balance and maintenance margin. And whenever margin balance falls below maintenance margin, liquidation happens. Margin balance is balance of your futures account, including unrealized P&L, profit and loss. Unrealized P&L is calculated based on mark price, I explained here. So when you have an open position, the position plus or minus the profit and loss that is generating, which is unrealized, plus your available wallet balance in your futures account together form the margin balance. And when you have an open position, the margin balance constantly changes. Why? Because your profit and loss will change the value of margin balance. And maintenance margin is the minimum value of margin balance that is required to keep your positions open. And if margin balance becomes lower than the maintenance margin, liquidation happens. Maintenance margin depends on the size of your positions. Generally, the larger the positions, the higher the maintenance margin. As I said, when margin balance falls below maintenance margin, all your positions will be liquidated. But we have a setting for preventing this to happen. Here, by clicking on this button, which already cross is selected, you see that we have two options, cross and isolated. If you select the cross margin, all your open positions together will be considered as collateral, and all the positions will be liquidated at the same time when the margin balance falls below maintenance margin. And isolated margin considers positions separately to calculate the liquidation. In other words, liquidation only applies to the position that is considered, and you only lose on that position, and other positions will not be liquidated. We continue with cross margin in this video, and here we have a tool that helps us to quickly monitor the risk of open positions getting liquidated. If the margin ratio, which is the maintenance margin divided by margin balance, reaches to 100%, your positions will be liquidated. Please pay attention that it's better to prevent auto liquidation because it has additional fees, and it's better to close it manually and not waiting for auto liquidation. Alright, now let's see how we place orders and what kinds of orders we have here in Binance Futures. This part is a little similar to the spot trading platform, but there are lots of differences with additional functionalities, and also the process of placing orders and managing them is totally different with spot market. We've already chose USD-M futures and BTC USDT perpetual contract is selected. And the first thing that we must do is to transfer USDT to our account here in futures wallet for USD-M futures. Here you see that we don't have any USDT available, and by clicking on transfer, here we can transfer USDT from spot wallet to USD-M futures wallet. The coin USDT is already selected. Here you enter the amount you want to transfer, or here you can select the percentage you like to transfer. I click on 100% and all of the available tethers in my spot wallet will be transferred here in USD-M futures wallet. And by clicking on confirm, it's done. And here, as you can see, we have USDT available to start buying or selling the contract. We have the transfer button also here in the assets, and our available balance is also shown here. And in the case that you don't have coins available in your spot wallet to transfer here, you can simply buy coins by clicking on buy crypto. And you can simply transfer it back to your spot wallet simply by clicking on transfer button again, and you click on this button to change USD-M futures to your spot wallet. Enter the amount you want to transfer or any percentage here. I select 100%, I click on confirm, and all the USDT from futures wallet go to my spot wallet. And as you can see here, I don't have any USDT available. Please pay attention that cryptocurrency market by itself is very volatile and risky market, and trading in the futures market and leveraging your positions can expose your account in much greater amount of risk, and very small move against your position can bring large loss when you use leverage. So I highly recommend you to open an account on testnet.binancefuture.com and practice as much as you can until you learn how to correctly place orders and how to trade before starting to trade with real money. Everything is exactly like here, but on testnet.binancefuture.com, Binance gives 100,000 USDT, not real one, so you have 100,000 USDT in your wallet to practice trading. Alright, before starting to place orders, here we have trading rules and also some important settings that I must explain. First, let's check the trading rules. Here it shows the trading rules on Binance. For example, the minimum trade amount is 0.001 BTC, or for example, the maximum market order quantity is 1000 BTC, or you cannot have more than 200 open orders on Binance Future. You can study the rest of rules later. Let's go to preferences. Here in order confirmation, you can turn on order confirmations for any of different kinds of orders. So anytime that the order is submitted, order confirmation will be required. And here in position mode, you can select one-way mode or hedge mode. This is an important setting if you intend to hedge your position. If one-way mode is selected, you can hold position with that contract in one way, which means, for example, if you buy or go long the contract, you can't go short and have a short position as long as you have the long position open. But in hedge mode, you can have positions in both conditions. For example, you can go long and short with a contract at the same time, and you can hedge your position with that contract. This must be set before opening the positions. In this video, we continue with one-way mode, and in another video, I will explain hedging and how it's used in practice to manage risk. And here in price protection, by turning on this option, you can be protected if the difference between last price and mark price becomes greater than the threshold in the time that your stop loss and take profit orders reach the trigger price, and they will not be triggered. Price protection threshold is 5% and it's mentioned in the trading rules. And here you can turn on some notifications if you need them. Alright, getting back to orders. Before I start placing orders, please pay attention that one of the main difference here with spot trading platform is that in spot market, you must have the coin available in your wallet, and after that you can sell it. For example, you must buy the Bitcoin first, and after that you can sell it. If you don't have Bitcoin, so you cannot sell because there is no Bitcoin in your wallet. But here in futures market, it doesn't matter if you have the Bitcoin or not. You can sell it even if you don't have it. If you remember, you're buying or selling a contract. So we have both of buy and sell here ready to act. When you analyze the market and you think the Bitcoin price is going to increase, so you buy, or it's said you go long, or you take a long position, and at higher prices you can sell it and make profit. And when you analyze the market and you think that the Bitcoin price is gonna fall, so you sell it even if you don't have it, and it's said you go short or you take a short position, and when the price decreases you buy it back in lower price and make profit. For buying and selling, or going long and going short, we have different kinds of orders here which are similar to spot trading platform like limit order, market order, stop limit order. But here we don't have OCO, but instead we have another 3 kinds of orders like stop market order, trailing stop, and post only orders. All right, let's begin with market order. If you remember from the previous episode, with the help of market order, you buy or sell quickly with the best current available price, which means that your buy or sell order will be executed instantly with the best available price here in pending orders in order book that are previously placed by other traders. So by the help of market order, you buy or sell at the current price of the market. Here it shows how much USDT we have available to buy this contract, BTC USDT perpetual future contract. Pay attention that cross margin is selected, and we set the leverage level to 10, so we can have positions up to 10 times our available balance. If you look at here, you see that how much BTC we can buy or sell with our available balance by the help of leverage. By our available balance, we can buy something like 2.5 Bitcoins, but by the help of leverage ratio of 10, we can buy 22 Bitcoins, as you can see. Here you enter the amount you want to buy, which cannot be higher than the maximum amount that is shown here, or you can use this slider to automatically set the amount based on percentage of your available Tether. For example, here we enter the amount 1 Bitcoin, and here it shows how much it costs for us to buy 1 Bitcoin, which is 4,397. Why? Because we are using leverage of 10, so Binance takes 4,300 as margin and applies leverage of 10, and we can buy 1 Bitcoin with this 4,300 USDT. Here we have 2 options to select, which I will explain them in next examples, because in this example I just want to show you how you can simply buy or sell a future contract and what are all these informations here and here that appear after we enter a position. So everything is ready. We are placing a market order, 1 Bitcoin, the leverage is 10, cross margin is selected, and we can go either long or short. Consider we have analyzed the chart and we think that the price is gonna rise, so we decided to buy. Simply by clicking on buy or long, the order is submitted, and as you can see here, we have a position now, which is BTC USDT perpetual contract. Because it's a long position, here we have green color. Here it shows the leverage level for this position. Here the size, which is 1 Bitcoin. This is the entry price. We entered this position. This is the mark price. It's also shown here. I explained this, and it's used for calculating unrealized P&L, unrealized profit and loss that you see here, which shows that now we are in $8 profit, and it's constantly changing, as you can see. This is margin ratio. It's also shown here. I already explained it. When it reaches to 100%, our position will be liquidated. This is the margin for this position. If you remember, we had this here in the cost when we were buying this contract. It's not fixed and it changes constantly. It was also changing here in the cost because it depends on the current price. Here we have ADL. Let me explain what this is about. When your account size becomes negative and goes below 0, there is a mechanism which is called insurance fund, and it's used to cover the losses. In situations when the market is highly volatile, this insurance fund may fail to cover the loss. In this case, open positions must be reduced. I will explain reduce here, so don't worry if you don't know what it means to reduce a position. So as I said, in this case that the insurance fund failed to cover the loss, the open positions must be reduced. This is called auto deleverage, and ADL shows your position in auto deleverage queue. We have 4 lights here, as you can see. When these 4 lights are on, there is possibility that your position may be reduced. Here, by the help of these buttons, you can directly place market or limit order for this position to sell it. You can also do it here, which I will completely explain all of them. Here, if you click on this, all of your open positions will be closed. I will also explain this with an example. Here, you can place stop loss and take profit order for this position. You can also do this here by limit order and stop limit order, or here when buying the Bitcoin contract. I will explain all of these. Don't worry about anything. Here it shows your margin balance and your maintenance margin, which I already explained what they are. And here the margin ratio, which is maintenance margin divided by margin balance. And when this ratio reaches to 100%, our positions will be liquidated. I completely explained all of these earlier, so you can go back to that part and review them if you don't fully understand them yet. Here it shows your wallet balance. Pay attention that here it shows your available balance to enter more positions, and it's constantly changing, as you can see, because you have an open position, and because of profit and loss, your wallet balance is constantly changing. But here it shows your wallet balance by considering the money you transferred here in your wallet, realized profit and loss, funding fee, and commissions you pay to Binance for your trading. On the price chart, the position that we opened is shown with its P&L, as you can see, and we can remove it simply by turning off this button. Alright, we have an open position now, and we want to close this position because, for example, the price hit the target we expected and we want to sell this position to make profit, or the price went the other way and the position is in a loss and we want to close this position to prevent more losses. How we do it? We can do this in different ways. First of all, it's highly recommended to place stop loss and take profit order when you are opening the position, or immediately after opening here, for example, which I will explain them how to do it. For now, we want to just close this position to make you familiar with the concept of buying or selling contracts. This is a long position. We bought BTC USDT future contract, and to close this position, you need to sell the same contract with the same size to get out of this position. And we have different ways to do this. We went long 1 Bitcoin, so we must go short 1 Bitcoin. We enter 1 Bitcoin here, and by clicking on sell short, the order submitted, and as you can see, it closed our open position. For another example, let's go short on Bitcoin. Consider we have analyzed the chart and we think it's gonna fall, so we go short and sell it, and then in lower prices we want to buy it back to make profit. We enter the amount, for example 1 Bitcoin, we click on sell short, the order submitted, and here our open position, a short position. Now consider the price is down and we want to close this position, which means that we must buy the same size of Bitcoin. So here we enter 1 Bitcoin and we click on buy long, and the position is closed, as you can see. Let's enter another position, for example a long position, and see what other ways we have to close it. This time we buy 2 Bitcoins, clicking on buy long, and here it is. The other ways to close this position is using these 2 buttons here, market and limit. By clicking on limit, you can place a limit order to close this position, which I explained this after teaching you how to place a limit order. And by clicking on market order, that exactly do what we just did. It automatically places a market sell order with size of 2 Bitcoin, and this position will be closed. Let's click on it, order submitted, and it's done. The position is closed. Let's buy again 2 Bitcoins, clicking on buy long, and here it is. The other way to close this position is using this, close all positions, and it will close all your positions here. For each position, it places a position the opposite side with the same size, exactly what we did here or what this button did. We click on it. It asks, are you sure you want to close all your positions? We confirm, and it's done. This option is useful when, because of a reason, you want to get out of all your positions immediately, and in practice you may rarely use this. Until now we entered a position or close our positions by the help of a market order. Generally, market orders are used in situations when buying or selling and getting out of the position is more important than buying or selling it in a certain price, because you may pay higher prices because of slippage. If you don't know what slippage is the difference between the price you expect from a trade and the price that the trade is actually executed. For example, when the market is highly volatile and the Bitcoin price is falling sharply, you place a sell market order. But after that, you see that the price that the order is executed is lower than what you expected. So market orders are only used when you are in a rush and you want to quickly buy or sell and exit your position, no matter higher or lower price than what you expect. Another way of entering or closing a position is limit order. Limit order is not like market order that is executed quickly at the current price of the market. Limit orders is a kind of pending order, and actually it's placed in order book, and it will be executed when the price reaches to the level that you have specified. We call it limit price. So when the price reaches the limit price or a better price, your order will be executed. And this means that you can place a buy order lower than the current price of the market, or you can place a sell order higher than the current price of the market. Let's see how we do it in practice. We go to Limit tab, and let's begin with long positions, buying Bitcoin. Consider we've analyzed the chart and we think 40,000 is a strong support level. We want to buy 2 Bitcoins when the price drops to 40,000. So here we set the price to 40,000. We enter 2 in the size, and pay attention that this order tells Binance that you must buy 2 Bitcoin at 40,000 or a better price. And here you see that 2 Bitcoins at 40,000 costs 8,000 for us because we are using a leverage of 10. We click on buy, order submitted, and here it is in open orders, not the positions. This is an open order. We don't have the BTC USDT perpetual contract yet, and when the price reaches to 40,000, this order will be executed. And in this tab, in the positions, we will have a long position of 2 Bitcoins. Let me cancel this and show you what happens if we place a buy limit order higher than the current price of the market. Let's set the limit price to 60,000, for example, and the size to 1 Bitcoin. And this order means buy 1 Bitcoin at 60,000 or a better price. I click on buy, order submitted, and as you can see, the order executed instantly, and we have it in positions. We have a long position here, and the entry price is the current price of the market. Please pay attention that limit buy order means to buy at this price or better price. We set to 60,000, which was higher than the current price of the market. The current price was a better price, so the order instantly executed at the current price of the market. So limit buy order is for when you want to buy lower than the current price of the market, and you must set the limit price in a way that is lower than the current price of the market. Let's close this position and place limit sell orders. Consider we analyze the chart and we think, for example, 58,000 is a strong resistance level and the price will fall after hitting this level. So going short at that level can bring us profit. We set the price to 58,000 and the size, for example, 2 Bitcoins, and we click on sell short, order submitted, and here it is in open orders, as you can see. When the price reaches to 58,000 or a better price, this limit order will be executed and we will have a short position here in positions. Let me cancel this order. Please pay attention that limit sell order will be executed at the limit price or a better price. So for example, if you set it to 40,000 and set the size, for example, 1 Bitcoin, and by clicking on sell short, the order submitted and it instantly executed and you will have the position, as you can see. And the entry price is the current price of the market, because current price of the market is higher and considered better, so the order instantly executed. So please pay attention that limit sell order is for when you want to sell higher than the current price of the market, and you must set the limit price in a way that is higher than the current price of the market. Let me close this position and show you how you can use limit order to close your open positions. Let's place a market buy order with size of 1 Bitcoin, for example. We click on buy long and here it is. This is a long position. We opened this because we think that the price is gonna rise and we want to sell it at higher price to make profit. Consider we have analyzed the chart and we think 57,000, for example, is a good price to close this position and take our profit. What does this mean? This means that we must place an opposite order, a short position with the same size 1 Bitcoin to close this position. So we go to limit tab, we set the price to 57,000, we enter the size 1 Bitcoin and we click on sell short, order submitted. And as you can see here in open orders, we have a limit order at 57,000. It's a sell order. This is actually a take profit order. When the price reaches to this level, the order will be executed and it will actually close this position that we have here. Let me cancel this limit order and show you another way that you can place a sell limit order. Here, you can also place a limit order simply by entering the price here, 57,000, the amount here to 1, which is already 1, and it will automatically create an opposite order, a sell order, like what we just did by clicking on limit, order submitted, and here in open orders, you see that we have a sell limit order at 57,000. Let me cancel this and go to positions. Please pay attention that if you enter a price lower than the current price of the market, for example, if here you enter 40,000 and by clicking on limit, you see that your order will be executed instantly and your position will be closed. So always remember, for a sell limit order, you set the price higher than the current price of the market. Let's place another market order, but this time a short position. For example, 2 Bitcoins. We click on sell short and it's here. We entered a short position because we believe that the price is gonna decline more, and at lower prices we can buy it back and make profit. Consider, based on our analysis, we think that 40,000 level is our target and a good price to close this position. So we must place a buy order at 40,000. We go to limit tab, we enter the price to 40,000. The size must be 2 because we have 2 Bitcoins here in this position. So we enter here 2 and we click on buy long, order submitted. And here it is in open orders. When the price reaches to 40,000, this order will be executed and it actually closes this position that we have here. In fact, this is a take profit order. Please pay attention, if you enter a price higher than the current price of the market, your order will be executed instantly and your position will be closed. So be careful not to make any mistake. Let me cancel this order. And here you can also place an opposite order, a long limit order, simply by entering 40,000 here and 2 Bitcoins and clicking on limit as I explained. Please pay attention that we can also close only part of an open position. For example, here we have a short position of 2 Bitcoins. Here I go to market order just to illustrate what happens, and I enter the size to 1 Bitcoin, and I want to go long, opposite of our open position. And when I click on buy, my position reduced to 1 Bitcoin. In fact, I close half of my position and the other half is still open. And I can also add to this position and increase the size of this position. Again, I use market order to illustrate this. For example, consider I want to add 2 Bitcoins. Here I enter 2. Because it's a short position and we want to add to this position and increase the size of this position, so we must go short. I click on sell, and now as you can see we have 3 Bitcoins in this position. Here we have an option, reduce only, that we can select it when we placing orders. When we are in one-way mode, and if we select reduce only, by doing this, we can make sure new orders that we place only reduce and decrease the size of an open position, and it never increases and adds the size of the open position. For example, I selected reduce only, and if I try to increase the open position, for example, 1 Bitcoin, let's enter the size 1. This is a short position, so to increase the size of this position, I must go short. And by clicking on sell short, you see that order rejected. So because reduce only is selected, we can only reduce and decrease the size of this position. For example, if I go long 1 Bitcoin, the order submitted and executed, and the open position reduced and 1 Bitcoin decreased from the position. Let me close this position. All right. Another kinds of orders that we have here is stop limit order. Stop limit order is a kind of limit order, but here we have another setting that is stop price, and it actually triggers the limit order. So here you set the stop price and then the limit price, and when the price reaches to stop price, your limit order becomes active and goes to the order book. Let's see how we use it in practice. Consider we want to go short when the price reaches 40,000, because based on our analysis, we think if the price reaches to this level, it will even go lower. With limit sell order, you can't. If you remember, in limit sell order, you must set the price higher than the current price of the market. But we can enter this position by the help of stop limit order. We set the stop price to 40,000 and we set the limit price a little lower than a stop price. Why? Because in cases when the market is sharply falling, we can be sure our entire order gets filled. We set the limit price to 39,000, for example, and we set the size 1 Bitcoin, and we click on sell short. Order submitted, and here it is in open orders. So when the price reaches to 40,000, a sell limit order at 39,000 or a better price with size of 1 Bitcoin will be triggered and goes to order book. The limit sell order will be executed at 39,000 or a better price, which means if the market is not very volatile and the falling of the price is not sharp, it will be executed somewhere equal or near to 40,000 because it's a better price. This order can also be used for setting stop loss and exiting a position. Let me cancel this order and see how we do it. Consider you entered a long position here. Let's place a market buy order with size of 1 Bitcoin. We click on buy long, order submitted, and here is our long position. To manage your risk and protect yourself from large losses, you must place a stop loss for this position. One way is to place stop limit order. Let me show you how you must do it. Consider you want to place your stop loss at 40,000 here. So if the price went against you, your position will be closed at 40,000. We go to stop limit order and we want to place a sell order. Here we set the price to 40,000 and the limit price a little lower than 40,000, for example 39,000, and the size must be equal with your position size, which is 1 Bitcoin. So here we enter 1 and we click on sell short, order submitted, and it's done. And here it is in open orders. So when the price reaches to 40,000, a limit sell order at 39,000 will be triggered, and it's usually executed at 40,000 or very near to 40,000, except when the market is sharply falling and you may have some parts of your order filled at lower prices. Actually, that's why we set the limit price a little lower than the stop price. Let me cancel this and also close this position. And let's place stop limit buy order. Stop limit buy order is useful, for example, when you believe if the price reaches, for example, 58,000, after that the price will advance more. So you want to buy Bitcoin when the price reaches 58,000. With limit buy order, you can't do this, but with stop limit order, you can. You set the price to 58,000. and you set the limit price a little higher than 58,000, for example 59,000, so you can be sure that your order gets filled in the case of sharp advancing. And let's buy 2 Bitcoins, for example. We click on buy long, order submitted, and it's in open orders now. So when the price reaches to 58,000, it will trigger the limit buy order at 59,000. So your buy order will be executed at 59,000 or a better price that is usually filled at 58,000 or near this, which is considered a better price for buying. This order can also be used as stop loss order in the case you have open short position. Let me cancel this and let's open a short position. We go to market order and let's sell 2 Bitcoins. Clicking on sell short, and here it is in positions. All right, we have a short position now, and we entered this position because we expect that the price is gonna fall. But what if the price goes against us? So we must set a stop loss order. Consider we want to set stop loss order on 58,000, for example. So we go to stop limit order. We set the stop price to 58,000 and the limit price a little higher, for example 59,000, and the size must be 2, equal to our position size. We must go long. We click on buy long, order submitted, and here it is in open orders. So if the price rises and reaches to 58,000, a limit buy order at 59,000 or a better price, which means that it will be executed at 58,000, which is a better price, or higher in the case that the market is sharply advancing. Let me cancel this and also close this position. And let's see what is stop market order. Stop market order is another version of stop limit order, and the difference is that here you only set the stop price, and when the price reaches to stop price, a market order will be executed. So by the help of stop market order, you can place both of stop loss and take profit order for an open position. For example, let's open a position with market order. Let's buy 1 Bitcoin, clicking on buy long, submitted. Here's the position. Now we want to place stop loss order at 40,000, for example. So we go to stop market order. We set the price to 40,000. We set the size to 1 BTC, similar to position size, and we click on sell short. And the order is in open orders, as you can see. Now let's place take profit order, for example, at 60,000. So we set the price to 60,000 and the size to 1 BTC, and we click on sell, and here it is. So when the price reaches to 40,000, a market sell order will be executed and the position will be closed. And also if the price reaches to 60,000, a market sell order will be executed and the position will be closed. We can place these two stop loss and take profit orders even in easier ways. Let me cancel them. This one, and also cancel this one. One way is here. After you entered a position, we can click on this and simply enter the take profit price, for example 60,000, and stop loss price, for example 40,000, and it will also give you the estimated profit and loss. As you can see, we click on confirm, and here they are in open orders. As you can see, let me cancel them, also this one, and also let me close this position. And another way of placing stop loss and take profit order is when you're placing a limit order here or placing a market order here. For example, we want to buy 2 Bitcoins. We set the take profit orders to 60,000 and we set the stop loss price 40,000. We click on buy, order submitted. Here you see the position, a long position with the size of 2 Bitcoin, and in open orders, you see the 2 opposite short positions, our stop loss and take profit orders. Let me cancel this and also this, going to position. Now you may ask, when we have easy way of using stop market order to set stop loss and take profit orders, or even easier way of setting them here or here, which these are also automatically set stop market order, why a trader may decide to use a limit order for take profit or stop limit order for stop loss orders. With stop market order, you don't have such control on what price the order is going to be executed. The only option that you have is to set the trigger as mark price or last price, as you can see here, and the order will be executed at the current price of the market. And sometimes you see that it's lower or higher than what you expected, and it causes more loss for you, especially when the market is volatile and is rising or falling sharply. But with stop limit order and limit order, you have more control on your orders and you have some options to select. For example, for limit order, we have additional instructions here, and with TIF time in force, you can set predefined amount of time that your orders remain active by selecting GTC, which is abbreviation of good till cancel. Your order will remain active until it's entirely filled or you cancel it. For example, if part of your order is filled and part of that not filled, the unfilled part remain active until it filled, or you cancel it by selecting IOC, which is abbreviation of immediate or cancel. Your order will be executed entirely or partially, and if part of your order executed and part of that not executed, the unfilled part of your order will be cancelled. And by selecting FOK, which is abbreviation of fill or kill, your order must be filled entirely immediately. If it cannot be filled entirely, your order will not be executed at all. And for stop limit order, besides TIF, here we can set a mark price or last price for the trigger, the stop price. We have another kind of order which is called post only. It's like limit order, but there is a difference. When you place a limit order, your order can be executed against an existing order before entering in the order book. But when you place a post-only order, your order will always be added to order book first, and then it will be executed against an existing order. By doing this, you only pay maker fees, which are lower than taker fees, and it can have benefits for you. Another order that we have here is trailing stop, and it's used to lock in profits and limit the losses. You give it a fixed percentage rate, and for example, when you have a long position and the price is moving up, your stop loss also moves up with the price. When the price stops or moves down, stop loss doesn't move. I don't recommend you to use it because setting stop loss based on percentage is not a correct strategy, and you must set your stop loss based on price action, for example, support or resistance levels or other important levels based on your analysis, whether it's going to be a technical analysis or fundamental analysis. Setting a fixed percentage for stop loss is not wise to do. And if you want to move your stop loss up or down and lock in your profits, it must also be based on price action. For example, if you have a long position after a pullback happened and the price started rising, you can move your stop loss up and set it below the pullback, which is now a strong support level. In a separate video, I will completely explain how to choose correct levels for setting stop loss and how to lock in your profits by moving the stop loss up or down based on price action and other market information. Alright, that's it. Thank you for watching this video and I hope it has been helpful for you. If you have any question, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it. Please subscribe to my channel if you haven't already and hit the bell so you get the notifications of my new videos. See you guys in next episode and good luck with your trading.